Hello, this is Martin here from Secrets, the channel for learning about trading and investing. Welcome to a brand new episode of Markets Tomorrow, where we look at how the market performed today, what was the price action today, and how we can have a better trade plan for tomorrow's. And this is for September 8th, Wednesday, 2021. Right, so as we do every day, we would be looking at analyzing it based on all these parameters that I've said on the charts, and we'll do additional analysis on open interest and institutional participation, sectorial watch, and global commodities, etc. And then we'll come out with some actions, right? So without wasting time, let's get into the charts. So this is the Nifty 50 chart. What you see here is nothing but a spinning top. Okay, it's a small body candle. It is bearish, especially when it is coming on the top. Previously, yesterday, we had a doji, which is also indecisive bearishness, right? So overall, there is some kind of bearishness that is there. That could mean some consolidation, or it could be some correction also to the fib levels. Bank Nifty, what you see here is hammer. Hammer has a longer wick on the down, which indicates that there is a bulls who are bought in and then push the market upwards. So bull presence is there, which is what you see, the hammer pattern. But overall, you can see the last 3 days there is a retracement and has now come to a support level. Now, what is the next thing that we have to look at is the support and the resistance levels. Let's look at that. Let's look at Nifty, and we can see that it has made an all-time high today. Another all-time high with a few points difference. Yesterday was 17,430 near to that, and today it is 36.6 or 7 points up, but it's an all-time high, and it is at the channel top and also the fib extension 50% resistance level. So that's the first resistance would be this 17,450 is the first resistance level where it stopped today, and then it would be 17,750, that kind of, right? 17,750 is actually the 61.8 fib extension level. Now below that you have the supports at 17,150 and 1750, that level. 17,000 you have a rounding number, then you have 16,750 and 700, that is another support, and then below you have 16,600, 500 level, then all the other supports, right? Bank Nifty, what you can see here is it's already taken a support at the 36,500 and 36,200, that band, and it's at the channel support is there down here, right? You can see that channel support also is coinciding with the below support of 35,800 to 35,600, that band. If it drops from here, it can take support here, but you can see that where it has taken support and bounced with a hammer is a support area, so there is a chance that it can go up. Resistance support is 37,000 has to be conquered first, then all-time high of 37,700 has to be conquered. These are the two resistances on the upside. Supports we already discussed. Now we would look at the open interest data and see what does that indicate. So open interest data for the Thursday 9 September expiry is showing that it's near to some kind of bullishness, 0.91 put call ratio. Highest resistance is at 18,000, then 17,500, then 400. So four, right, supports are seen at 16,300. So 300 and 500 would be the range, 17,300 and 500. So the next support after that is 17,000, similar to the charts. Bank Nifty put call ratio is 0.62, which is not at all bullish, right? And the resistance highest is seen at 37,000 has become good, and 36,500, which was conquered yesterday, also is seeing some resistance now, right? The highest support is at 36,000. So 36,000 and 37,000, which is the resistance where the action for 1,000 points would be the moment itself. We have 38,500 also having large number of call writing, that is there. Now futures open interest, the ladder might not have come, but we'll check. You can see that 7 September, yes. So it's a Nifty has a long unwinding, which is slightly bearish portion, which is people have gone long, has unwinded and then made it short. Slightly bearish. Bank Nifty also has got a long unwinding portion. That's what the futures data is. In options data we already saw. Now institutional data, if you see, you can see that today small selling of 150 crores has happened, 145 crores has happened. DI is also small selling 130. So both of them sold, but they are selling very small. So this is not indicative of anything. At least at least we have to be happy that big selling is not happening from both of the institutional players, which is so probably they're waiting for something, some event to happen is what looks like, since yesterday also it was the same small selling, but small buying happened on the DI side. Okay, now look at the VIX. We discussed that the other day that the VIX has gone to a new regime, right? The VIX, you can see the VIX has gained momentum and it is slightly closed below yesterday's 15.1, 15.89 it has settled. So what exactly happened in the VIX today? If you see the time frame lower 7, VIX was dropping and then rising, right? Market, if you see, VIX was dropping, so market shoot up, and then VIX was falling, so market VIX was falling, market shoot up, and VIX was rising, the market fall down. So that is not exactly what happened, but market fall down slightly as compared to yesterday, right? Very slightly, right? Small dip in. So, but it's seems like 15. It's a range formation of the VIX that's currently happening, right? So we have seen the volatility. Sectorial watch. What happened to the sectors today can be quickly seen from this heat map before we get into each of the sectorial display. So this is what happened in the sectors. All were bearish, all sectors except FMCG. So ITC was doing good, right? And all of this, Asian Paint, Titan, Nestle, all of these were doing very good except HUL, right? So cement and telecom, telecom also did well. So all the, so it was all bearish all around except for FMCG sector. So let's see what happened in the sectors, each of those important sectors. So we are seeing a bearish candle after a long time, not after a long time, after a few days of breakout. Even after the dollar had weakened, we had seen a breakout. Before that we had September 1st. After September this is a big dip, right? So this could be, so momentum is very much intact in the bullish zones, but let us see whether there is a divergence here, 72 and 70. So this looks like there is a divergence. So this is something that you have to be cautious, right? No, not actually. It is bullish. So this is bullish. Actually, this is reverse divergence that is playing out, and this is what you get. So so the price is increasing, and then we have seeing a divergence. This is a reverse divergence. This is bullish. So now, as of now, this is only on confirmation, right? Only if the market moves further down from tomorrow's low, today's low tomorrow, right? Then we can say that it is probably playing out only if it is moving above, above this candle. Only then we can say it is playing out a bullish divergence, reverse divergence bullish. That is already seen. That means that the divergence on the momentum is showing that probably there could be further up move. But today we have a bearishness, and even otherwise momentum is in the bullish zones, trend is in the bullish zones. But the only thing is you have to be cautiously bullish because vertical movement has happened and weekly there is a divergence. And then, but good thing is the bullish divergence that you see is is likely to move further the market, the sector upwards. Metal, you can see that it is resisting the momentum and it is again going consolidating. You have to wait for the momentum to climb up to the bullish zones. Auto, again same, it is consolidating and not rising to the bullish zones. It is so you'll have to wait for that. Pharma also same, it has gone to the sideways and consolidating there. We'll have to wait for the momentum to catch up. Pharma was slightly showing bullish signs, signals other day, but not now. FMCG, what you are seeing here is that it is in the bullish zones, but this candle is dangerous. This is a gravestone doji, which is dangerous. There could be some corrections that can come in, is what FMCG is doing, but otherwise it's bullish, just like IT. Um, Based on doji indicators, there is a bear pressure that came from the top. No selling happened there. Right. So real estate was bullish. So, but you see that that was also taken a dip. Right. It is a breakout from a cup and handle on the monthly, on the weekly, and then it has taken the retracement, but it is very much bullish. So real estate, FMCG, and IT is bullish. Rest is all sideways. We'll have to wait. And these sectors are showing some bearish signs. We'll have to cautiously be bullish on all of these three. Right. And that's the sector I watch. Let's now see what is the dollar index talking about. Yeah. So dollar index is has seen a reversal after it had dipped. Right. We have seen that it has been a good amount of dip that has happened in the last more than last 2 weeks or so. But now it is reversing back again. So that is dollar is strengthening. So what does the currency pair says? The currency pair also is bouncing back after checking the channel support, right? So rupee is further weakening, right? So dollar is strengthening, you can say. That's what. So big consolidation happened on the channel, and now today's candle, this seems to be very bullish with a open is equal to low. So it's very bullish candle, right? So that's not good that rupee is weakening. Dollar is strengthening, so IT may further move. Brent oil is consolidating at a very high price range of above 70. Dollar, you can see that it had hit the channel top, and near that there is resistance, and then it is dipped today big, but it has taken a support at the same place, right? So it may be consolidating around this before it makes another attempt to break this resistance. This 1830 dollar is a big resistance, right, which is spanning to multiple years backwards. So breaking that would be hard. Above that also you have big resistance, so it will be going in slow momentum. So gold had gone into the bullish zone slightly, but it again dipped back because of today's big bearish move, right? So it has taken a support. So dollar is strengthening, so gold will reverse. That is what is happening. Gold has strengthened today, and it went sideways, went bearish, right? So it dipped into the sideways momentum. So this is what happened. Now global markets, if you see, all of them is showing some red as of now, but small red. No big down moves seen, no big up moves also seen anywhere. Europe and US all markets are showing slightly red at this point in time. We'll have to check out the next more pre-market. Now to wrap up, this is the wrap up. So the candlesticks are giving us an indication that there is a slight consolidation and bearishness that is there. It could be a consolidation, or it could be a small correction, or it could be a bigger correction. We do not know. All we know is that the support and resistance level, and accordingly you have to do the thing, whether we are going long or short, right? And that's yeah. So actionable would be to pick up, pick up the bullish sectors that we saw, the reality, the IT. This IT is likely to be leading, continue to be going up is what. So all IT, FMCG, and reality are bullish sectors, but you have to be cautiously bullish given that the market as such, the indices are showing some signals of bearishness, correction, or consolidation. Not fully bearish, but some retracement or a correction can come in, right? So you'll have to go along only on the if market moves up steadily above the all-time high that is made on the indices, and on both indices actually. So I hope this helps, and if you like it, hit the like button and subscribe if you're not done, and share it to all. It will be great motivation for us to keep doing this, and happy learning and happy trading. Bye.